Hello, everybody. Welcome to episode 25 of Simply Finance with Shane White. I am your host, and it's Saturday, April 18th. And thanks for listening today. We're going to go into a topic today that I think is going to be helpful for a lot of you. If you watched yesterday's episode, I went into a little bit into how I'm thinking about investing companies right now with the current market conditions. And one of the importances there is making sure, a lot of these companies have good cash positions. And so I thought another awesome concept we could talk through today is kind of how to, if you already know how to do that, how do you then add another layer of a diversification to your portfolio? And one of the simplest ways to do that is to break out the entire market into the 11 sectors that make up the market. And essentially what the sectors are just the different categories that every stock must fall into one of. So that's what we're going to talk about today. And I think all of you will hopefully enjoy that. But what I wanted to start off with first today is showing you guys, I just recently, yesterday, thanks to my brother-in-law, figured out that I can share my screen through this recording software that I use. So I wanted to show you guys the tool that I've talked about a lot. And if you want to skip through, I don't think this will take more than a couple minutes. If you want to skip to the next part of this episode, you're more than welcome to. But I've talked about it a lot. And now on the video side of things, now that I know that I have the capability to show you guys, I wanted to show you today, just to give you a little bit of a preview of what you can use this for. I just wanted everyone to know this is a free resource that I've created that I would love for a lot of you, if not all of you, to take a look at and leverage for your own investing needs. So I called it the stock market rebound tracker, and I'm going to share my screen for any of you who are just on the podcast. I'm just going to talk about this. It's the link to it is in the show notes, and it's just stock market rebound tracker. And I'll talk through it here a little bit. So if you're on video, you can see my screen. So what this is basically just a dashboard in a Google sheet that is public, that I'm allowing everyone to have for free. Again, I'm trying to help you guys. This is a free resource that I'm going to offer through SimpliFinance, our parent company. And what this is essentially just a dashboard of a lot of the companies that I'm interested right now in investing in. This is just what my eyes are on. And as I talk through a lot of the concepts on this show and interview other people about a variety of concepts, I want to make sure you guys always have access to just really what's on the front of my mind. And this is something I'm always planning, at least for now and everything, to have for free. I think this would be a really cool component to SimpliFinance and for all of you who listen and watch or both. To see what I'm looking at. So really it's, as I look on here, there's a list of any company you want. Let's just say I scroll down here, a company on the left-hand side with the blue link is Boeing. One of the really cool things is I have links built into each company. So you can just click on the link on the Boeing name and it'll take you to marketwatch.com. My internet is extremely slow today. And it will actually pull up their investment profile, which is similar to what I walked through yesterday. So that is built in to every company I'm looking at. Then it just has some information on like the exchange it's traded on, the sector it's in, the date I added it to this tracker, just so we can see some total variance information. And as you keep scrolling to the right, it's got like daily pricing information, daily changes, where it ranks in my list. Then it goes into a lot of like finance metrics of like volume traded, average volume, the 52-week high and low, the total shares outstanding, an important column I've talked about, which is market cap. And then it goes into like total delta. So like since I added it to this list, how has it performed? Dollars, percentages. And then if you keep going to the right, I have a whole section on whether they pay dividends or not, what their dividend yields are, and then when their next earnings release will be, which that's actually really helpful information. And for a lot of you, it's a very manual process to go through and update. So I would really leverage this if I was any of you that are interested in getting ideas or following along with, what I'm talking about. This is kind of like where all my ideas and brain dumps are going right now, and I will definitely leverage this a lot during future episodes. So just something for you to follow along. So I'm going to stop sharing my screen now, just back to me. So like I said, so what we're going to talk about today are the 11 sectors of the stock market. And as we dive into it, just a little quick update on the markets this week. If you weren't paying attention, or even if you have, it was a hot week for all three indexes on the market. The Dow finished up over 2%, the S&P up 3%, and the NASDAQ was up over 6.1% for the week. So another extremely strong week for the stock market. I think a lot of you, if you've been listening to me for a few weeks, you're probably thinking like, well, shit, Shane's told me to hold off on investing for a little bit. I'm still keeping that strategy, and I'm still keeping that perspective, to be honest with all of you. I personally think this is like what they call a false rebound, where there's some really good news with the coronavirus pandemic right now. We've seen some, flattening of curves and some plans to reopen the economy. So people are excited about that, which is great. But I think what we're ignoring is how damaged the economy is right now. The stock market is booming right over the last 2 weeks with no real backing besides hope, which is okay, right? I mean, it's good that people have hope and people want to dive back in, but I'm still holding on. I haven't fully reinvested our money back in the market. So that's just my perspective on all of it. Okay, let's just jump in to the 11 sectors of the market. So like I said, there's 11 sectors that so there's thousands of stocks traded, right? And all of them will fall into 11 of the sectors. And it's basically the way to think about it. It's like the highest level of categorization that the GICS has distinguished. And those 11 sectors are energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunication services, utilities, and finally real estate. So every single stock falls into one of those 11 sectors. And what we're going to do today is basically walk through what these sectors are. I'll hit on a few companies that are like major movers in those sectors as well. And then one of these guys that I follow in the finance, he's a writer for US News on the money side. He talks about like one ETF that has had strong performance that basically you can invest in an ETF that's like a sector ETF, and essentially it tries to spread itself out across the entire sector. So if you don't want to try to like pinpoint a few stocks within a sector, you could just invest in the ETF and have pretty strong correlation to the general sector. And the reason I'm really talking about this today is this is what me and two of my friends in our first major stock market endeavor, this is how we really focus we called it a mutual fund, but it's a motif that I talked about in one of the very first episodes. And really what that is we just basically try to break down the entire market into sectors using these 11 sectors to really diversify. So make sure we had a few stocks in every sector, and it really worked. And I think a big part of that was because we used this as the main diversification lever in our portfolio. So we'll just jump right in. The first sector is materials. And what this really covers is any company that their core business involves taking some sort of natural resource or raw material and processing it and converting it into something more useful. That covers like a lot of mining, chemical companies, metal businesses, logging, like wood logging, and even some oil and natural gas stocks will fall in here. Some major examples of these, and I say major, these aren't companies I focus on a lot, and maybe I should be focusing more and diversifying further into some of these sectors. But the three on here that are major examples that I'll mention are Rio Tinto, which is a ticker symbol of RIO, if you want to check that out. Another one's Ecolab, which that one I've actually heard of, and then Vale S.A. you can find a lot of mining companies in here, like I mentioned before, and some oil and gas. That's more of where I've focused in the materials space, but maybe not necessarily some of the biggest companies in that space. Another stat on here that we pulled is what the gains have been since October 2017 market peak. So before the recession, where they were, and then now. So it's since the peak there. So it's inclusive of the huge recession and to essentially right before the coronavirus, and the sector as a whole. If you combine all those stocks together, to just simplify this, what has their performance as a whole equated to? And so basically in the last 13 years, and I'll do this for every sector, the materials sector has grown 76.7%. So very strong growing sector. They also have it as a sector, combining all of them, a dividend yield of 2.2%. And the ETF that I'll point you guys in the direction of is called Materials Select Sector SPDR Fund, and the ticker symbol is XLB. So that's the first one. The second sector that I'm going to cover is industrials. And this one is perhaps, I don't know, more loosely defined than some other of the stock sectors. Industrial sector stocks tend to either be involved directly in the production of capital goods like aircraft, electrical equipment, industrial machinery, or any other types of transportation infrastructure. Honestly, many of America's most iconic blue chip companies come from this sector, and it's really this is a very strong sector for like really big conservative U.S. companies. Some major ones, and a lot of you have probably heard of these, would be GE, which is a huge conglomerate, and they do all kinds of business. Caterpillar, Lockheed Martin, Boeing, obviously, so making planes, military equipment, those are huge. Now, from the same time point in October 2007, this sector has seen a 124.9% sector gain, and they have a dividend yield of 2%. And again, if you want another large industrial sector ETF for these guys, I would point you in the direction of XLI. All right. Moving on to our third sector, financials. Let's see. What do you want to say about the financial sector? I think the financial sector has had a lot of turmoil in the last 15 to 20 years, especially with this sector was the center of the problem of the 2008 recession with the housing crisis, because all banks fall into the financial sector. And there's just been a lot of problems in this sector. You think of a lot of the conspiracies as far as fraud that has happened on Wall Street, Lehman Brothers, Bear Stearns, a lot of those all fell in here as well. And honestly, I think a lot of these companies still haven't really gotten their full reputation back since 2008. And you can see that in the sector gains in this category. So a few major ones: Bank of America, Visa, PayPal, Berkshire Hathaway, and this sector's only grown 21% since October 2007. And their dividend yield is about the same as the last two at 2.3%. There is a financial select sector SPDR ETF, and that's XLF if you're interested in this one. All right, on to energy. So energy is going to be a sector that I'm going to point a lot of you to right now. And I'm going to point you in that direction because that's also what I'm going to be looking at, with oil prices dropping as much as they have, and all of us knowing that oil is not going anywhere because of the coronavirus. This is one that I would keep an eye on. And a lot of these companies deal with the extraction of sources of energy from the earth. And most of the common companies that do the exploration, production, refining, and marketing of fossil fuels like oil, natural gas, coal, fall into this sector. And newer like production types. A big one in the U.S. is fracking. Fracking companies can fall in here as well. So a few major companies I'm sure you've heard of: Halliburton falls in here. ExxonMobil, Schlumberger, Kinder Morgan, all those fall in here. Because of oil price turmoil, this one over the last 15 years has not grown very much at all as a sector, only 7.7%. They do have slightly higher dividend yields than the other sectors we've talked about already at 3.7. And this sector, the ETF I'll point you in is XLE. So energy will be one, though, that I think we're seeing obviously lots of cheap prices. And I think this could be a great opportunity to minimally put some money into some ETFs in energy as we come out of the coronavirus pandemic. The next one is consumer discretionary. And the name kind of says a lot, right? So this one really sucks in a lot of the companies that really their focus is marketing their products and services to consumers and not businesses, right? And what they're selling is usually bought with discretionary income. So it's not things you absolutely have to have, but what a lot of people want to have, right? It's also known as like consumer cyclical, which makes sense when you consider some industries. It encompasses automobiles, apparel, hotels, restaurants, all fall in here. Even like leisure-related businesses and luxury goods all fall into consumer discretionary. Since it's such a wide variety of companies in here, it honestly partially does kind of diversify itself in a way. And because of that, this one has seen a ton of growth since 2007. So some of the companies that fall in here would be Carnival Corp, which right now obviously is, in a horrible position, and something that you guys, depending on your beliefs on whether cruise ships will have a definite future in this new normal, that could be a great one to look at. Grubhub, Lululemon, Party City. You can see they're all like totally different types of companies, but they all have one consistent backing, which is a discretionary spending from their consumers. This one has actually seen an incredible sector gain since 2007. Sorry, like I said, this sector has grown 281%. So you can imagine if you had a lot of your money in there, this would have been a strong one to be a part of. Their dividend yields are slightly lower at 1.4%. And it's the same ETF section type of sector ETF I would point you in is XLY. So that's consumer discretionary. The next one of my favorites, and where probably a lot of you have started investing potentially, is information technology. So this is arguably probably the most premier market sector of the 21st century. And it's really powered by the internet and device-driven stocks, right? And like broadly speaking, software, hardware, semiconductors are the three major pillars of this sector, and a lot of these companies are all based out in Silicon Valley. So what's wild about this entire sector of the stock market is you can really point to one part in the United States where most of these companies are based out of, which that's kind of just cool in itself, I think. Like whenever I go out to Silicon Valley, it's amazing. You can just drive around and see all these different major companies. Like you can drive past Facebook and Google, and they just keep going on and on and on and on and on. Walmart.com, YouTube, they're all out there. So it's wild to see. This is an easy one to kind of point in the right direction for you, but major examples: Apple obviously falls in here, Cisco Systems, Intel, Oracle. And this one also has grown a tremendous amount since October of 2007, and since the market peak, the sector has gained 279%, which is insane. This sector obviously has much higher growth potential, and a lot of these companies are not older, mature companies, so their dividend yield is only 1.5%. And the ETF I'll point you to here is XLK. So that's information technology sector. The next one, communication services. I think this one is also one that through this pandemic, I think a lot of us could really put some money here. With 5G coming up, I think it's a great industry to look into. It used to be called the telecom sector. It was actually redefined in the fall of 2018 to communication services. This sector has been an interesting one with a lot of mergers and acquisitions of similar companies. and it's really attracted a lot of people, as they've basically turned tons of smaller communication companies into a few Goliath companies, you could say. The ones that I'll point in your direction, and it's funny because the second one I'll mention here, I thought they were. I actually thought they were considered information technology, but it makes more sense that they're communication services. So the major ones I'll point out are Verizon Communications. I mean, that's a pretty obvious one probably for a lot of you. Facebook. So Facebook was one, honestly, before I started doing research for this. I would have thought they were in information technology, but this makes more sense for them in communication services. Walt Disney Company, Comcast Corp. So those are like the major ones. This sector's gains since October 2007 are at 61%, so not quite as large as the last few we've talked through, but still a large one. And I think these ones will continue to see a lot of growth over the next decade, with a lot of things going to online streaming, and a lot of these companies are involved in some way, shape, or form. Their dividend yield is 1.4%, and the ETF that I'll point in your direction is XLC. So communication services, again, there could be a ton of growth here. I would love to see a few of you put some money into some sort of communication service stock. I think it's a great move at this point, especially the ETF. This next one is one of my favorites. I just think this is always poised as one of the most interesting sectors, whether it was the failing of it in 2008, but it's a physical good that is here and is always going to be here, and that's real estate. And so it to me, it's one of my favorites to talk about. It's one of the fastest growing parts of the market in recent decades, even with the recession. Let's see, what else can we talk about? It's an interesting one, depending on lots of different components of the market. It can really impact for consumers, especially, like, what are people millennials, what are we buying? Are we buying real estate? Are we renting? All these things can really move the needle on a lot of the companies that are in this sector. And I think real estate development and then watching the economy, it's a good way to kind of pad your portfolio. There can be a lot of volatility with it, but it can also come with a lot of growth if you hold on to it for a long time. So a lot of the major examples I'll call up here: Redfin Corp. Anyone who's been in the home buying process has probably used Redfin or Zillow. Redfin is my favorite, and it's just a great app and tool to view real estate and review real estate real time on your phone. American Tower Corp, Simon Property Group's a big one, and then Public Storage, PSA is their stock ticker. Those are all major real estate players. They've had a large growth since October 2007, kind of in the middle of the pack of all the sectors. We're covering at 97%. Dividend yields are slightly higher at 3.3%. And the ETF I'll point you guys in here is the Vanguard Real Estate ETF, VNQ. And that can be a really good one if you don't really care or know a lot about real estate, but you want to diversify your portfolio. That ETF can be a great way to give you leverage towards the sector in the market. All right, that's real estate. The next one's healthcare. So healthcare is another sector that's been growing faster than the wider economy over the last few decades, accounting for an ever larger percentage of America's expenses. You've got two big sides of healthcare when it comes to classification in the stock market. There's the medical device manufacturers and medical services providers that are over here on one side. And then you have the actual biotech and pharmaceutical products, the drugs themselves, on the other side. Major examples: Johnson & Johnson is a major one. Pfizer, McKesson Corp, Abbott Laboratories. Abbott is actually on my stock rebound tracker right now. It hasn't done very well since I added it to the portfolio, but it's a major, major, major player in the pharmaceutical industry. So something to keep an eye on for your own portfolio. This has been another enormous gainer, as we talked about before. It's outpacing the general market. Since October 2007, sector gains have been in 219.5%, so enormous growth. Dividend yields here, it's kind of similar to information technology. They're lower. The hope is they're growing. They're kind of a growth sector for most people's portfolios, Their dividend yield is 1.8%, and the healthcare select sector SPDR ETF, stock ticker symbol XLV, is the largest healthcare sector ETF, and I would point you in that direction to really help diversify. And I apologize for the chimes in the background if you guys can hear that. I am filming this episode out in my living room as my wife is not feeling well and taking a nap, so I had to alter my normal recording location. I hope that's not too obnoxious. The next one, and this one is probably one that a lot of you have either been hearing about. It's definitely obviously what's in the front of the news through all this coronavirus pandemic that's been going on. And it's one that is probably at the front of all of our minds, and that's consumer staples. And really, like, without the fruits of this sector, as a joke, I read this quote: "The human species would essentially go extinct." And it's kind of true, and especially we see it in this situation. When I started doing the research for sectors, we started looking into this even before the coronavirus pandemic really took off. And it's interesting because we've known this has been called consumer staples, obviously, but I don't think until now, during all this, have we really realized how important consumer staples have been, right? I mean, food manufacturers, distributors of non-durable household goods, personal care products, and beverages all fall into this. I mean, this is really the necessities of life that keep people needing and buying, no matter how good or bad the economy is. And that's proven right now. As we know, we always need, food, toilet paper, which is hard to find these days, laundry detergent, shampoo, toothpaste, etc. It's argued that this space is one of the most defensive, which means it can hold its own or even advance during a recession, but usually trails the market in expansions. It's interesting because I think what we're going to see in this quarter and the next is potentially some of the largest growth in consumer staples that we've ever seen, at least like quarter over quarter, because so many people are using their limited income right now in this space. So this will be a really, really important one. I really can't hone this one. I would put in my top two to make sure that this is where your money is backed. Some of the major examples we all know: Walmart, obviously an enormous one, Coca-Cola, Colgate, Procter and Gamble. All of these players, they have actually seen quite a bit of growth since 2007. The sector is up 188%, but we're going to see this greatly expand through the coronavirus pandemic, no doubt about it. If you just want to get into an ETF, I would push you to XLP, which is the Consumer Staples Select Sector SPDR ETF. That'll help you diversify pretty well through the consumer staples sector. We are almost to the end here, folks. Just a few more. I hope you're learning a lot. I hope this is interesting to all of you. It's funny when you go and really break it down and look at all these different sectors, you really realize how many ways there is to diversify your portfolio. So I think it's interesting. I hope you guys do too. All right, the next one is utilities. So really, utilities provide fundamentally necessary services to all of us, falls in your water, gas, electricity, to local communities, wider regions around the country. There are really high barriers to entry to get into this industry because of the capital needed to get started, as well as being geographically limited. And a lot of these become natural monopolies inherently. And because of this, the government's extremely involved. These are all really highly regulated. And a lot of times their profitability is even held in check by the government. The only water company for 1,000 miles couldn't decide to charge $20 per gallon for water, right? That's like an example that I wrote down. This is the sector that the government gets most involved in because that's the example, right? That you wouldn't want to have happen. If you had competition for water, you could have people in the middle of nowhere that don't have access to this water supply, being charged a ridiculous amount of money for a bottle of water. So there are certain sectors that the government's more involved in for good reason, right? Some major players in this: NextEra Energy, Duke Energy, Exelon Corp, Dominion Energy. Those are just some major energy players. Duke Energy is one in the Midwest that I hear of a lot. Obviously Exelon is too. The sector has gained a decent amount of growth since October 2007 at 128%. Their dividend yield is 3.4%, so also strong. And this is one, if you're not super interested, but you just want to have some companies baked in for the utility sector. The utility select sector SPDR ETF or XLU is a great one to invest in here. Again, this is probably one that I need to learn more about. I haven't spent much time in utilities, but it's really, important. So that's it. That's all 11 of them. Thanks for listening. This is going to be one of the longer episodes that I've done with just me. So if you've listened this long, I hope you learned something today. Just to review quickly, the 11 stock market sectors we covered: materials, industrials, financials, energy, consumer discretionary, information technology, communication services, real estate, healthcare, consumer staples, and finally utilities. If you even bought just put some money into each of those ETFs I mentioned, that alone is going to help diversify your portfolio a lot, right? It's going to be, what we did as a group of friends, we really started getting into investing, is we just wanted to make sure we had a few companies in each sector. And it's just depends on your investment strategy is really at the end of the day what matters. If you want some risk and you want some reward, I still suggest trying to diversify. You can find reward and risk for that growth in all of the sectors. But if you have all of your money tied up in one or two of these sectors, you just leave yourself open for unnecessary risk, is how I like to call it. So today was a big Saturday, informational podcast and video. Thank you for watching and thank you for listening. I hope this was interesting for all of you. It's finally getting warmer here in Chicago, so I'm going to go enjoy some sun and go for a workout. And let me know if you guys have any questions. As always, hit me up in the comments, send me a DM, whatever you need, and I will be happy to help. Again, at the beginning of the episode, when I walk through the stock market rebound tracker, I have the link in the episode. So please check that out, and I would love to know your thoughts. So thanks again, everyone, for listening. I hope you all have a fantastic Saturday. Hope you get out and enjoy this weather a little bit. And hope everyone's staying healthy and safe. All right, everybody. Thank you so much. Have a great one. We'll see you tomorrow.